Hello friends, I'm Praveen Pathiyil. I've been into the stock market for the past 14 years. I welcome you all for yet another Renko video. Last time we have spoken about Renko being used as a predictor for the events. In this particular video, we are going to discuss how to use Renko on a day-to-day basis in terms of making a trade and creating a successful trading strategy. When it comes to trading strategies, there is no 100% sure shot when it comes to the markets. It's always 80%. More than about that, any successful strategy should be applied with a success ratio of more than 80%. Today, what we are going to discuss has the ratio of approximately 87%. Once we say that successful trading strategy, it should be applied well across all the different instruments, irrespective of the time frame. It should be a common success strategy. Only once it has been tested across different instruments at different time frames, we have come up with this particular strategy to roll it out for the beneficial of the traders. So let us go straight into the charts of understanding how to apply this particular Renko trading strategy, and what are the little secrets that are there in terms of making a successful trading strategy with respect to that of Renko charts. So let me pull the charts for you. Okay. So you can see that I use the TradingView platform for my day-to-day trading as well as for the professional part. Apart from this software, we have been using the other softwares also, but this is little user friendly, and it can be practically taken wherever you move around with whatever device you have. So in this particular charts, the first thing that we need to do is, like, this is a default chart setting that comes along with this particular platform. We are changing the charts, the normal candles, to that of the Renko charting. Here you go. So we have converted the normal candles into that of the Renko candles. By this is by default. So there are a few things that we need to understand even before we define this particular charting. In TradingView, there are Renko candles with wicks in it. The first thing that we are going to do in this particular thing is kindly remove off all the wicks. So I'm just deleting all the wicks. I don't require the wicks. The logic is very simple, that wicks means that we are trying to inculcate the noise. The beauty of the Renko charting itself is to eliminate the noise completely and to just concentrate on the trend part. So thereby eliminating the wick, you will see that there is a smooth flow of Renko chart in this particular presentation. Like in the last video, or you must be definitely knowing the basics of the Renko. So we have discussed this again and again, that it's a very simple, eye presentable manner in which the Renko chart is formed, rather than getting into the confusions with a lot of the candlestick patterns and all those things. It has just have only two types of bricks, the bullish bricks and the bearish bricks. That is the reason as to why people love using Renko candles more than any other form of charting. And if you were to look at it, it's as simple as that. You buy it when the new green candle is formed and hold it till the first red candle is there. Once the red break has been formed, then you exit and take a trade on the opposite side. It's as simple as that, but this is a basic definition of how do you go about the Renko charting, looking at this particular Renko chart. Now, the purpose of this particular video is not the basic one. We are going to go in depth to understand how these are being plotted and what are the little kept secrets, so that you can become a much refined and a successful trader when it comes to using the Renko trading strategy is concerned. So let us go in detail. So first thing you need to keep in mind is that the Renko charts have been in use since 1830s in the eastern part of the world, the Japan. I would say that Japanese traders were really successful when compared to that of even today's traders. Even though there were many modern trading tools or techniques or advancement like what we have right now, they were much more successful than what we could find day-to-day trader in the present world. The logic is very simple, that they were keeping it very simple, all the things very easy. They didn't had too many tools or the indicators, as we have been bombarded with thousands and thousands of indicators that we are working on in the current environment. So they were simple, down-to-earth people who believe that simple things works much better than anything else. They have put in a lot of hard work in finding out the real truth of how the markets move and all those stuff. Unfortunately, it so happened that in World War II, most of the really kept secrets has been destroyed in the war, and whatever is left behind from the ruins, we dig deep and try to find out how things were in the pre-World War II era. So a lot of things were gone missing, but we try to find out the little best kept secrets, whatever we could dig it out, and try to present it in a successful manner. This is what we have been doing again and again. So let us go to today's topic. After discussing the background, let us go and find out how to make it a practical way of putting this into a strategy. Okay. Now, if you were to look at this particular form of Renko charting, you can find out that the brick size is ATR 14. We usually get a lot of questions over the mail, over the phone, WhatsApp, and all those things. People ask me a lot of questions like, for this particular instrument, is the brick size been so and so, say suppose 100 or 200, is that the correct way to keep it? Or people ask like ATR 14 is good enough, or how good is ATR 9 or ATR 10 or whatever be it. So some people used to ask me like, which is the right time frame for this particular instrument, which is that indicator that needs to be used for this particular time frame, and all those things. First thing you need to understand, when it comes to practicability or the most successful use of Renko, the simplest logics that I will say is that understanding the Renko itself holds a key. 80% of your success purely depends on how well you have understood the Renko bricks, or in simple words, defining the Renko bricks size is 80% of your work completed with 80% successful ratio, which means once you get the right brick size, you're done. The other things is just an add-on. The main part of the success story is defining the brick size. So if you were to look at it, even in this particular software, if you go to the settings, you will understand that when it comes to defining the box size, there are two methodologies used in this particular software as well, the ATR and the traditional. The Japanese people, Japanese trader, whoever has introduced or been using in the 19th century, they have been using only the traditional part, which means in traditional part, you need to define the box size. When it comes to ATR, ATR has been the average true range itself has been introduced only in 1970s, late of 1970s. So you can understand that ATR was not usually or conventionally used in the original methodology of Renko charting. So traditionally, box size has to be defined by us. So what is it that how do you go about fixing a box size? say suppose if I'm giving a chart of Dow Jones, or say even if I give Bitcoin chart, this is Bitcoin chart. How do you go and define yourself without knowing anything about this particular Renko charting? How do you go and define the box size? Tricky, isn't it? Okay. Now here is where the research comes for us. We try to dig deep to find out how actually in the conventional method, what was the logic behind defining a brick size. Because when we see like 2 or 3 traders defining the brick size for the same instrument, the same manner, how do they get along with the same kind of brick size? Was there any common logic behind it? Was a key question that was going around with me. So doing a lot of research, I could understand that somewhere closer to 1912 or 1914 charts revealed that they have been using the half of the 9-period average of the absolute range as the brick size. So let me come. The absolute range means the high minus the low. You take the absolute range for the past 9 days. Say suppose, I'm just giving an example. For the last 9 days, the range was exactly 100. So you take an average of the averages of the last 9 period, which again comes to that of 100. And you're going to divide it by 2. I'm repeating the statement. They have been using half that of 9-period averages of the absolute range. That was the secret that they have been keeping well with them. So what happens in this case, if it is 100 for the last 9 days, the average also comes to that of 100. You're taking the 50 as the brick size. Okay, this is what they have been using. Now what happens over a period of time, this formula has been eroded or completely gone away with the introduction of so many indicators, especially from 1960s. There were bombardment of indicators being introduced, and right now we are sitting with thousands of indicators, probably more than that. So what happens is, like, from 1980s, we have started using, or we have completely forgotten how to define this particular brick size. There's no documentation. There's no evidence that this is the way that you need to define this particular brick size. It is purely based on a lot of conversations, a lot of research that we put in. We have found out that this is one of the way that they have been defining a brick size for a successful trade when it comes to the Renko charting. Now what happens? After 1980s, once you have completely forgotten about how to define this brick size and all those things, Renko charting has completely lost its charm. People have started forgetting about the Renko chart. Only with the introduction of average true range as an indicator, people have started talking again back about the Renko charting. Definitely, yes. The video that we exposed, wherein we exposed one beautiful secret of predicting events, has made it a quite popular form of Renko charting in India. And I'm very thankful for the FinBridge for giving me that opportunity to expose one secretively kept method to predict events. After that particular event, people have been talking widely about Renko. I see many software companies coming up with Renko charting. So it was like giving a real life to the Renko itself. Now I'm coming up with a strategy. It took me years. Even before that, I had to do a lot of research to understand whether this was the real kept secret, how this been used in the day-to-day practical world. A lot of efforts were putting on for the past 3 years now. And after that, I'm coming up with this particular strategy. Now, I've told you that this is the way that they have been using in the past. You can try it out. After that, with the introduction of the average true range, things were much easier. People have just replicating, like people have started replicating this average true range instead of the original way of defining the brick size. Now today, in my after a lot of research, what I have concluded is like, if I ask you to like go back every day or after completion of every break or the trading period, you take back the absolute range for the last 9 days, then you take half of it and all those things, it becomes tedious. I know now people are more tech savvy than hardworking, though people definitely are there who do a lot of calculation even now with papers and pencils. Yes, definitely people are there who put in a lot of efforts. I'm not denying it. For the benefit of everyone, I have found out that one easy solution how to go about defining the brick size, and this is a new methodology of combination of the old system with that of the average true range. In this particular system, the brick size is being very clearly defined by me. Like, it's very clear. You go whichever time frame you want, you select it. It's not about the time frame. There is no question of the right time frame. There is no such thing of a right time frame. It is all about to do with right brick size with reference to that particular time frame. So in this particular chart, if we were to do what is it exactly that we are going to do, by default ATR 14 is $529 for this particular Bitcoin. Now what I'm going to do is like, I'm going to convert this particular thing into my own style, wherein I'm going to split this particular thing into half of it. So this is a Bitcoin, a daily time frame. ATR 14 by default settings is 529. So I'm just going to take 265, which is half of it. So I'm just going to look at this. I'm changing the box size from ATR to that of the original methodology, the traditional one, wherein I'm going to define the box size. So 265 is what I have got, the value, which is just half of it, half of ATR 14. This is how I'm going to define this. I'm just plotting 265, clicking it, and I'm done. This is the easiest way of getting converted into real-time Renko chart. And what do I do with this particular style? The logic is very simple. Say suppose if I'm taking a trade here by the conventional method, like first break being a green break, I'm entering a long. In the third candle, I'm revising the stop loss here. Okay, that's it. I'm not going to do anything else as long as I'm going to get a red candle wherein I'm going to get out of this particular position and go reverse. Okay, originally when I enter at this particular break, my stop loss would be at the base of the previous red break. I will revise my stop loss to that of the third break as soon as it has been formed. Why 3? You may ask. The logic is very simple. I have seen many documentation with regards to the Japanese way of doing the trade. They have focused again and again on number 3, number 9, number 13 again and again. They were very keen on that, but those numbers. The logic is like, even if you go and find out, there is a chart itself which says TLB or the 3-line break charts. They were defining that particular system purely on the 3-line break. So basically, like, they are giving more focus on these particular numbers, the 3, the 9, the 13. You can even ask, there's a logic behind why they have been using half of the average of 9 of the absolute range. The logic was very simple. Earlier, if you were to look at it, the Japanese stock market used to work from Monday to Saturday. So basically, that gives 2 weeks at 10 days, 12 days. So they have been using 12 plus 1, 13. It has more like the way that they have been doing was more disciplined manner. They had a logic for each and every number that they have brought in with. The replication or the multiplication of 3 was commonly used. So in this particular system, what we find is like I'm just using the first stop loss as the previous red bar. From there, on the third bar, I'm going to revise this particular stop loss. And the next trade that I'm going to take is whenever the red candle is being formed. Till then, I'm not going to exit that particular position. You can keep revising the stop loss upwards. That is up to you. But in this particular system, to be fair enough, I'm just keeping that I don't lose out on the running of this particular leg. So I'm just revising only once. Thereafter, as long as I'm not getting a red break, I'm going to hold that particular position. So what exactly we are going to do here is very simple. It is not about the time frame. It is like you can apply this particular thing in any different time frame. Just going to the 30-minute. Defining the brick size is all important. Now first I need to go and find out what is the ATR 14 value with respect to 30-minute chart. ATR 14 for Bitcoin 30 minutes is 114. So I'm just going to take half of it or for my brick size, defining my brick size. So it comes to 57. I'm going to change it to the traditional part. 57. And here I am done with it. Just taking you different charts. This is Dow Jones, 30 minutes. First I need to go and find out what exactly is the ATR 14 value was. It's again 114. $57. I'm done. Just going to the crude oil, a different time frame maybe, say 15 minutes chart. Need to go and find out the first thing. ATR 14. The 15 minutes is 0.22. I'm redefining it. Traditional 0.11, which is half of it. Here I go. Bitcoin, I'm coming back to the Bitcoin because Bitcoin or the Forex, we have seen that Forex and the Bitcoin is where the Renko works pretty awesome. Like the success ratio is more than 92%. So I'm just using the 15-minute time frame on Bitcoin to find out, or probably 10 minutes. I'm just changing. I'm trying out different time lines, time frames actually. So ATR 14 for this particular Bitcoin instrument on 10 minutes is 88. So I'm just going to divide it into half, which is 44. Here you go. So you get a lot of so it is not about defining the time frame, which is the correct time frame. It is all about understanding the brick size. How do you define this particular brick size? And there's another one thing that you need to keep in remembrance, that we are taking half of ATR 14, which means you need to revise this particular defined box size every 7th period. Getting it? Go and recheck whether there is no major changes after the 7th period. So in case there is, what happens is like average true range is purely based on the volatility, right? So what happens is like over a period of 7 periods, the volatility might increase, especially like if you're using that of the daily chart. Only the daily chart and above that particular time frame is where we need to go and change this particular not changing, like go and recheck whether the ATR 14 value has changed or not over and above the 7-day period or the 7 period itself. Like if you're using weekly candles, then you have to go and do it after the 7-week period. Probably, I don't think we will be using it beyond the weekly candles. That is the maximum that we will be using in terms of the Renko charts itself. Mostly, this particular strategy is going to be for the intraday players and very short-term positional players, wherein you're not going to hold the position more than 2 to 3 days. So if you are looking out for this particular thing, like 10 minutes chart, after the 7 period, which is approximately 1 hour and 10 minutes, you need to go check, rework on this particular ATR 14, whether there is a major change in that particular value. Then you need to adjust with the brick size. And over a long period of time, this would change. So if you were to look at it, this chart will show a lot of whipsaws at the earlier time frame because the ATR would have been completely changed. So it is always good that you stay with the present. It's very hard for the backtesting to be done. The logic is very simple. You need to keep calculating again and again and again and again to do this particular backtesting. That is the reason as to why it took me approximately 3.5 years to do the live testing, then come in front of you to explain what really is happening with this particular definition of the brick size. The only thing that we can do is that you do the paper trade for the next 6 months or 7 months. You will understand the power of defining the brick size the conventional way. And I have been doing the old method also, wherein I take the absolute range, go to the 9 period, take half of it. I've been doing that along with that of ATR 14 values, defining it by half of it, the ATR 14 values. It is almost the same. Hardly there is a difference of 1 to 2% between these two values. That is the reason as to why I thought like we'll make it little bit simpler. You need not go back again and again to find out the absolute range of the last 9 periods and take half of it. Let us make little bit simpler, wherein you note down ATR 14 value, divide it by half of it for that particular time frame. That becomes the best brick size to work with, right? So it's all about, it's not about the instrument. It is purely depending on the, not even the time frame, even not about the instrument, not about the time frame. It purely depends on what exactly or how are you going to successfully define this particular brick size. Once you have defined this particular brick size, then you can make your own definition of how to make an entry or how to make an exit. I'm just giving you an example. I'm not a big fan of indicators, but in this particular scenario, let's go for Nifty, Indian Nifty. I'm just using this particular thing. Again, I'm saying the first thing that we need to do is, I'm just giving you 30 minutes chart. go and find out what is ATR 14 value. It's 53, so I'm just going to use 26 as my brick size. Here you go. So what I'm going to do is, like, I'm just going to give you one indicator. It's commonly used, most popularly used nowadays, the super trend. I'm just going to define it. I like, you can use 10 period with the multiplier of 1, 2, whatever you feel like. Over the back tested period, what I feel is super trend of 10 factor of 3, the multiplier of 3 works really good. So I'm just plotting that particular indicator along with this particular chart. As simple as that. So defining the brick size, again and again I'm saying, defining the brick size is all about your success element. Is if you can define that particular brick size, 80% of your success is done. The remaining is just entry and exit. The second thing that I wanted to focus here is, there are charts wherein you will find the candle information, say something like this. I'm not taking a trade here, I'm just showing you that there will be candles like this, bricks wherein it is in formation. Kindly ignore them. Like how we have ignored the wick, it is always good that you ignore the information bricks. Right? So it's all about understanding. It just it works even for the, just giving you a pair of USD Canadian dollar, just showing you. First I need to go and find out the ATR value. This is 0.0019, so I'm just making it half of it, which means like I'm going to take it 0.0009. Done. The last two trades were really good. And I'm using it on a 30-minute chart. Probably players who are into the Forex market will be using 5 minutes or a 10 minutes brick size, or the 5 minutes time frame or the 10 minutes time frame. So I know that people are there who love to take a options trade with respect to that of Bank Nifty in India. I'm just showing you, like, if I were to use 30 minutes chart on the Bank Nifty, I need to find out the value of ATR 14 first. ATR 14 comes to 193, which means I'm going to take a trade on the value of I'll take 96, which is half of it. Here we go. So the last trade that I have got was entry at the maximum value would be 20,064. I don't mind. I'm taking the highest value of this particular after the breakout. The close was 20,064. I'm taking that particular trade, and I've exited at the lowest value of this particular short side, which is 21,504. So approximately the last trade would have been approximately 1,500 points in this particular Bank Nifty instrument. You can define the time frame depending on the risk parameter that you have defined. So the ideal way of choosing the time frame, that also I'll give you a hint on how do you define an ideal time frame. The logic is very simple. Go and find out the ATR 14 value in whichever time frame that you are comfortable with. Say suppose if you are taking a trade in Nifty or Bank Nifty, go and find out ATR 14 values in daily time frame, the 2-hour chart or the hourly chart. Go and try to find out ATR 14 value. So every chart will give you a different points. Ask yourself which is that particular maximum risk point that you can afford to lose. That defines your time frame. Say suppose I'm saying that in Indian Nifty, I can't take a risk more than 50 points. So what I do, go to the Nifty chart, need to find out which time frame that 50 points come in. It's a chart, 30 minutes chart. 30 minutes chart has ATR 14 of 50 points. So this is my time frame. This is how you define your own style of time frames, choosing the time frame rather than asking which is the right time frame. That is a wrong question. The right question to ask is how much you can afford to lose. Then try to find out which time frame defines that particular points, and take half of it to convert into that particular your own the right way of defining the bricks size, and integrate this indicator or probably any other indicator whichever you like. So here Nifty 50 points is my stop loss, or I would like to have 50 points as my stop loss. I go and make it half of it in the traditional method, 26. Now here comes my chart. You can define it. But don't give which is practically impossible. Say suppose I am a trader in Bitcoin and I'm not interested in losing more than $1. Give it a practical thought, how much you can lose. Then try to find out the right time frame. People are there, like they will say like Nifty, I don't like to lose more than one point. Practically impossible. Don't do it. Give it a sensible stop loss, a sensible definition for your stop loss. And the most important thing that you need to understand, once you have entered in a particular time frame, say suppose this Nifty 30-minute is wherein I have taken a trade, exit in this particular time frame only. Don't try to change the time frame and juggle it out with the different time frames. Commonly that's a mistake that wherein people will do. That is where I said like you need to have very good discipline like the Japanese traders did. Once you are entering into a particular trade, try to stick with that particular time frame as long as it is complete. And remember, whenever you are using a time frame less than that of 2-hour chart, in my understanding, I'm saying in my understanding, there is no definition or such anywhere written in any books or any legal form that whenever you are making a trade with less than a 2-hour chart, you are becoming a intraday player. even I will say like 2 hours itself is like little bit higher, especially with the markets wherein you have 6.5 hours. So it's basically for the future players that I'm speaking about. You can say like anything less than 1 hour time frame, you are actually a intraday player. Try to exit by end of the day. Renko trading strategy, this particular system works really well for the intraday players and the short-term traders, like for 2 to 3 days, nothing beyond that. And remember to redefine this particular brick size at every 7th period of the time frame that you have chosen. Try to take a trade with a particular time frame and try to exit the trade in the same time period, same time frame of that particular chart. You can create your own system, but as I said, this particular video is all about bringing you the real secret of how do you define a brick size in terms of the Renko trading strategy. Because defining this brick size is what you're going to give you 80% success. People have forgotten. People have really forgotten how to do the traditional method. And this is the reason as to why this particular video was made, to bring back what has been lost from the minds of the beautiful traders ever seen in the history, the Japanese traders who were using it practically with this particular Renko trading system. I'm repeating as a summary for the benefit of everyone. Renko is the beautiful and the simplest way of presenting the charts. Number 2, when it comes to the success of Renko, it is purely on the definition of the brick size rather than anything else. Third, define the brick size like the traditional players used to do. I'm not asking you to do the work, manual work. I've given you a simplest formula. Go to ATR 14 of any time frame of your favorite instrument. Try to take 50% of that, and that becomes the brick size for you. And keep revising this brick size at every 7th period of your time frame. It is not about the right time frame, it is all about defining the right brick size when it comes to the success of this particular Renko trading strategy. Integrate it along with, I have given a indicator, because basically I understand that people will come and ask me, give me an indicator along with this. I have tried out with many indicators. I am not a favorite of any indicator. I suggest, like, I don't even suggest any indicator for that matter, because a person understand, a real chartist understand indicators are just a derivative of the price movements. So you, unless and until you know how to read the actual price moves, there is no point in understanding the indicator. So as a quick solution, I have given you a super trend 10 factor of 3 based on my studies. You're always welcome to try out different indicators at different time frame, but just an quick solution that I have been provided in this particular video. So thank you so much for watching this particular video. If you have any questions, please do email me with the right question to get an answer from me, because I've been bombarded with mails after mails with a lot of questions. Ask me the right question and you're there. I'm ready to provide you with a very good answer. It's my duty to answer you with the right answers for all the right questions. But remember, friends, when it comes to Renko, Renko is most powerful for the day traders, for short-term players, provider you understand in defining this particular brick size. It's all about the brick size, nothing else. If you are defining it right, your definition will turn out to be at least 80% success ratio in whatever trade that you're going to take. So that's it for this particular video. Thank you so much for staying with us. We'll bring more secretive methods that is being followed in terms of the technical analysis is concerned. Thank you so much for watching this particular video. Please do leave me questions at the mail ID that I am providing along with this particular video. Do write your questions to that particular email ID only, so that I can give you a reply to what exactly I feel about after reading your question. Thank you so much for watching this video again. We'll try to bring more and more videos like this with little kept secrets of technical analysis. Thank you so much.